Let's get in the management. Mr. Sunil Kanodia, Group President at Syntex Industries, joining us on the phone line from Ahmedabad. Mr. Kanodia, thanks very much for taking out the time. You want to highlight Q3 for us? What has led to this, PAT performance decline?
Good morning. I think what we have to take from here is that all the segments or all the verticals of Syntex business have shown tremendous growth on YOY basis. And like if you look at prefab, which is about 22%, then monolithic 40%, custom molding India as well has grown about 15%, and overseas has grown about 28%. So overall, we have shown a growth of about 22%. As well as profits are concerned, I mean, on adjusted basis, if you do not consider forex losses as anything to do with the operations, we have a profit of 98 crore as against on similar basis, 68 crore of the previous year same quarter, and on sequential basis, about 77 crores. So we have grown on profit at 43.64, and therefore there is an improvement in the margins as well. One is that I would say that some of the segments continue to grow, other than monolithic, which is still sticky, and therefore we will keep on taking calls depending on when it really becomes, opened up and the government becomes positive, the action starts happening, momentum comes up. So we'll get back to that business again. Otherwise, we'll keep it kind of a muted or with 8-10% growth. So overall, I can see that this year we might be able to close about 10-12% of growth on top line and bottom line.
All right. So you're saying operationally it was still a strong quarter if we don't take into account the forex losses.
Yeah, because forex loss has nothing to do with the operations of the quarter. I mean, this is more of a balance sheet liability, which is there, and you just keep on mark to market. As per the law, you have to put it to the P&L since we are in the last year of our operations for the redemption of FCCB.
Sure. Mr. Kanodia, you want to talk about the other segments as well, particularly prefab overall and custom molding. How has the performance been for that particular segment? You said monolithic this time has seen a better turnaround in terms of revenues, but you're still expecting that to be a little more muted as compared to the others.
Yeah, other than tanks and textile, all these segments have grown good growth. Monolithic also has shown a growth of about 40%, but then let's understand that the Q3 of the previous year was quite low. So it was a weak performance in the previous year. That's why it shows 40%. But all I'm trying to say is that in monolithic business, we continue to be bullish. And that is one business which is going to throw tremendous opportunities in terms of size. The only issue is with regard to the debtor days. So when, the operation is in full momentum and, you have, for example, 2,300 crores of order book and you really go ahead full gung-ho, in terms of executing it, the top line could be somewhere between 1,600 to 1,700 crores and you can still continue to grow 25-30%. But then since we were in a transition stage of also looking at the objective of redemption of FCCB, which is due in March 2013, and we went through fundraising program. So we wanted to see that the fundraising is to the minimum in terms of, raising it from outside, and we have as much possible the internal cash accruals. And that's what we have tried to do. We have brought down working capital by about 100 crores. That will get released within this year. And I think going forward, what I am trying to say is that even if monolithic remains sticky, the other segments will continue to grow, and we aim this year, though, of course, 10 to 12%, but next year going forward, with little caution that economy will open up, we should be back on 20% kind of growth rate. And Syntex historically has been doing 25-30% CAGR, so we would as quickly want to come back to that kind of growth track. Besides, I think there are other issues that also you need to look in. Which is in terms of the return on capital employed ratio. I think with the new debt capital structure which will come into place post redemption of FCCB, what you will see is that the debt equity ratio will significantly change. And because of that, you will also have the impact on return on capital employed, which in my opinion by 2014 should grow by about at least 550 to 600 BPS.
Right. Mr. Kanodia, moving away from, the growth point of view, you have, finished raising about 1,000 odd crores in terms of funds. Any plans to raise more money and, the deployment of these funds that you've already raised?
Well, I think what we have done is we have raised right now we have got about 1,070 crores against a liability of 1,600, and other 660 crores or so was with us already as cash. So, I mean, when we redeem the liability of 1,600 crore, we'll be left with about 150, 200 crores cash, which we require anyway for our operations. So, as of now, there is no requirement for further fundraising. And that's why when we went ahead with the fundraising this time, we kept in mind that this is done on a long-term basis so that we have a balanced capital equity structure, the debt equity structure, and at the same time we focus on our balance sheet. We shrink the balance sheet, we make it leaner and meaner, at the same time improve on our return on capital employed ratios.
Just one last word, Mr. Kanodia, with regards to your FCCB, payment which comes up in March. Have you got enough funds for the same?
Yes, we are fully funded now, and we already got permission from RBI. Therefore, starting this week, we will be approaching all the bond holders, and till March, you will see that all of these will get redeemed.
Got it. Mr. Kanodia, thanks very much for joining in. Really appreciate you taking up the time and speaking with us. So operationally, the quarter was good for Syntex.
India's #1 news app just got even better. Download NDTV's new app. Fully optimized for Retina display. Full screen view. Faster response time. And Sudoku. NDTV's new iPad app. Download now.